We are Canada's most advanced gold developer right now. You can review our forward-looking statements on our website or in our corporate presentation at your leisure. So at a glance, what is Ascot? Like I said, we're the most advanced Canadian gold developer right now. We're building the premier gold project in the southern end of the Golden Triangle of northwestern BC. As you can see here, there's no lack of Canadian gold developers. By our count, there's about 21 of them, ranging from various stages of preliminary economic assessments all the way up from pre-feasibility to feasibility studies to permitting to financing. It takes about 5 to 10 years worth of work to get from the bottom to the top there, and we've done that in about 4 years here. So we've been moving at a very quick pace, and like I said, we're the most advanced gold developer right now, basically the only single asset gold developer in Canada in construction today. The British Columbia Golden Triangle is very prolific in terms of its mineralization and its endowment. It's got huge copper gold and gold silver and gold deposits up there. Lots of high grade, lots of massive deposits. The key to this whole region is the infrastructure, because there's mountains and glaciers and fjords. It's a rough area to get around and to build infrastructure. And so thankfully we have the benefit of having one of the 3 mills in the entire Golden Triangle. And as it happens, the other 2 are Red Chris and Bruce Jack, both of which are now owned by Newcrest. And so at the lower end of the Golden Triangle, we have that 3rd mill, which we're in the process of retrofitting and looking to restart that early next year. Zooming into our project at the southern end there, we're about 25-minute drive north of the town of Stewart, BC. So as opposed to a lot of the projects in the Golden Triangle where you have to fly in and fly out and have a remote camp, this one you can drive to from the nearby town of Stewart, like I said, in about 25 minutes. So the infrastructure is great. We have access to BC's hydroelectric grid power network. And you can see here, we're going to employ a hub and spoke model. So you have the mill kind of at the southern end of the Premier project there. We have the Premier deposit, the Big Missouri deposit, the Silvercoin deposit, and then also 23 kilometers to the southeast as the crow flies, we have the Red Mountain deposit. And so we've been able to, as the plan and the feasibility study states, we're going to employ the hub and spoke model to feed all of these deposits to one central processing facility at our mill. At about 2,500 tons per day would be the nameplate capacity. The feasibility study was put out in 2020, and a lot of work has been done since then, and so the way we see the project now is quite a bit different than this. Basically, we've explored and found a lot of exploration upside beyond the resource. So the future mine life potential and expanding that looks very prospective. And also some of the other development sequences we're thinking about changing, such as pushing the Red Mountain development out to the end of the mine life, which actually saves and defers about $50 million worth of sustaining capital. So the cash flow profile of the project as we see it is quite a bit more improved compared to the feasibility study in 2020. There's a lot of numbers there, and I apologize for the small font, but one of the few most important numbers here, right at the bottom there, you can see the IRR of the project, and we have not escaped inflation. We've put out a few updates for the project that have increased the capital cost. Right now it's going to be about $224 million as we released earlier this year, and that's a quarter of the cost that Bruce Jack was built for about $1 billion. We have the benefit of having inherited a lot of infrastructure, the mill building, the tailings facility. And so if you were to build a greenfield project today, you're looking at probably $1 billion, if not more, now that this inflation narrative has taken hold. But we're going to build it for about a quarter of that, given all of that existing infrastructure. And the benefit of that is that it's a high return project. The IRR at spot gold, even with these price increases, these CapEx increases that we've seen, is still 57% at $18.15 gold today. And so it's very hard to find projects, especially that have gone through inflation, that have gone, a third through the construction, to find an IRR as high as that in Canada today. So we still see it as one of the highest return projects in the development space right now. Also, if you look at the free cash flow numbers, once we get up to our targeted 2,500 tons per day, which equates to about 150,000 ounces of gold per year, that would equate to, at $1,400 gold, I think about a 29% free cash flow yield, or at spot gold, a 44% free cash flow yield. That's almost half of our market cap today. So pretty impressive free cash flow numbers and IRRs. So what's going on the project right now? As I said, we're in construction. We got our permits late last year and early this year. And a lot of work was done in the pre-construction phase, the early works phase last year. So the mill is almost way ahead of schedule. It's in really good shape. You can see the ball and the sag mills, which we had to order in 2020 and get them installed last year. The motors are also installed. That was recently done. So the mill's in really good shape. Bunch of other works being done in the mill throughout the winter, and then recently the spring has actually been pretty mild, so we've been able to do a bunch of outdoor activities as well, which is critical for the construction schedule this year. Doing the outdoor activities around the mill and around the tailings facility and also the water treatment plant, those activities are happening right now, and you can see in some of those pictures there. Also recently we announced, as scheduled previously, we started going underground. So we've been blasting out the portal at the Big Missouri deposit. We're about 20 meters in, and then we're going to establish temporary mine services such as compressed air and ventilation and water. And then once that's done, probably by the end of this month, we'll be going full-scale ramp development into the Big Missouri deposit. And underground development here is going to be critical for the schedule, for the ramp up. And so we're very pleased that this has gone pretty well so far on schedule. And also the early feedback from the geomechanical engineers and the people on site is that the rock quality has been better than expected, so it's really good ground up there. In terms of exploration, so since we put out in early 2020, the global resource of about 3.3 million ounces across inferred, indicated, and measured categories, we've focused our modest exploration budgets on drilling outside the current resource. And so you can see those yellow arrows there. We've found a lot of success kind of finding the down dip extensions of the Premier West and the Northern Light West areas. We also hit a kind of a new discovery almost near the Big Missouri deposit called the Day Zone. And no lack of visible gold, no lack of multi-ounce per ton intercepts over mineable widths. And also recently, we finished last year on kind of a high note. We re-drilled what's called the Sabakwe Zone. And the first hole that our team put in this area hit 7 meters of 36 grams per ton. And importantly, that's right down there by the mill. That's 600 meters away from the mill. And so if we can keep discovering areas like that and growing them close to the existing infrastructure, close to the mill, that's going to really help out with accretive discoveries and expansions to keep the mine life going at a higher production rate and also longer than the feasibility study indicated. That's just zooming in there on the Sabakwe Zone, and you can see on the left side there that 7 meters of 36 grams per ton in the first hole that we drilled last year. So we're really excited. Drills are turning on that target right now for this year's exploration season. In terms of performance and valuation, yeah, it's been rough. I'd like to say we're cheaper than everyone else, but I think we've all been hit by this equity market downturn here in recent weeks. It also happens to be a period where we're in the penalty box. I'll talk about the elephant in the room. We are currently renegotiating or trying to refinance a credit facility for $80 million US that was provided to us by Sprott Private Resource Lending. The reason I'm here today and not our CEO and President Derek White, he's at site right now with the team doing advanced due diligence meetings and discussions on site with potential partners. And so we're moving forward with other like-minded partners. I'll be available after the talk today. You can stop by our booth anytime, and I'll be able to give you a bit more context. But we're in the penalty box, and we knew that was going to happen as soon as we put out the press release on April 4th. So as long as we can, and we're confident we can, as long as we can in a timely fashion replace that credit facility in the next few months, then the project can continue uninhibited and not delayed. And so we're pretty confident we can get that done. So stay tuned. In the next few months here, we'll be able to put out an update. And then this is kind of the value proposition. This is a bit of the vision in taking a project from basically nothing, no resource or anything, and then going from construction, production, commercial production. This is what the 11 most recent precedents in the gold space did. And this is a bit of a subset of the most lucrative part on the Lassonde curve. That period from start of construction to declaration of commercial production, the average outperformance of the GDXJ over that period is about 103%. So you basically double the index over that period. So it's a pretty lucrative part of the Lassonde curve. We're about 20 to 30% down that curve, and so we're looking to do what a lot of those companies did in 4 to 5 years in 2 to 3 years. And so, I mean, this time next year, we're hopefully in production, and then 6 months thereafter declare commercial production. So it's a pretty lucrative spot on this curve, and that's what we're looking to do in the near term. Thanks for your time today.